What's going on, everybody? We are back with part 5 of our 6-part series on Market Masters, and what we're going to do here is show you risk-reward ratio and how to utilize that to give yourself a trading edge. So a lot of people get confused on how much they should risk per trade when they're trading a stock, and I'm going to make it super simple for you. A lot of people say don't risk more than 1 to 3% of your account. I think everybody has their own level that they're comfortable with. You will not grow unless you try to risk more. However, you can risk more smart. So how to do that? Say you have an account with $5,000. And say you want to break that up between 5 trades. Each trade gives you $1,000 per trade. Okay, so what we want to do is every time we enter a trade, for every dollar we want to make, we want to risk 50 cents. So what that means is we have a 2-to-1 risk-reward ratio. 2-to-1 risk-reward ratio to where we're risking $1 to make $2. Okay? We always want to keep that positive, and at the same time give ourselves the best entry possible to minimize our risk on every single trade we take. That way we can really leverage the cash that we have. So let's go back to our example of having 5 trades where each trade's at $1,000. Okay. Well, you might think, I'm only going to risk 1%, so I'm just going to risk $10. That's not how that necessarily works. We're risking 1% of the account, and that doesn't mean that we have to take a $10 trade and win it or lose it. That means our stop loss, where we cut our losses and move on, has to be $10 on a $1,000 trade. Okay? So let's go back to Tesla here. If we want to have a risk reward for Tesla and we're targeting 260, so I'm going to draw this line out here. If we think Tesla's worth 260 and we have a 2-to-1 risk reward ratio, we want to make sure that the price of the stock moves twice the amount we're willing to risk. So if this is our support line that we drew out earlier here, around, I think we said 210 in the other videos. Do it right there. What we see right now is Tesla is currently at that trend line. But if we really look here, if we buy $1,000 worth of Tesla, we're going to risk a lot more than $10, because it's going to go down here, could drop another $27. It's going to drop another $17 before it reverses the upside, and that's just on one share. You got to buy 5 of these shares to get to $1,000. Or I'm sorry, 4 of these shares to get to 1,000. So you're going to be down $50 before you can even potentially make your money. So that's where on smaller accounts, it's okay to risk more if you get in at the best times possible. Be patient on the trade, okay? At the end of the day, you want to minimize your risk and maximize your risk reward. So if you think it's going to 260, you don't want to get in right here, because right now, yeah, you would be close to a 2-to-1 ratio, because you're risking, was that $17 to potentially make $23. So you're not quite at a 2-to-1, so it would take you 2 trades to break even and make a little money. You want to be in a situation to where you can be wrong more than you're right and make money. And that is all by minimizing your risk and maximizing your risk-reward ratios. So buy very close to the support and resistance lines, but don't buy on every little support line. Like, don't buy on this line, okay? You want to buy on the lines that are big on the longer-term charts where everything lines up. Honestly, right here, this would have been a great opportunity because support was right there at the trend line and everything else was selling oversold. That would have been a great opportunity to buy, and that's why it ran up like crazy. Wait for the next one. Be patient. It'll be there. If it's not on this chart, it'll be on a different chart. So understand that you always want to target more than what you want to lose on every trade. So if you risk $1, you want to make $2. And that way, the higher that risk-reward ratio is, if you can get to 3-to-1 or 4-to-1 to where you're making $3 for every dollar you're risking, you will see that account go crazy, and you will also have the ability to lose more than you win. And that's how you become a better trader over time. It's being able to stay in the game at the longest possible time you can.